Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.4% today. It was kind of an interesting day just in the sense that we had some news today that usually would make the market go up, and it actually went down today. We had the ADP payroll report. So this is a look at private payrolls and how many jobs were added. There was 103,000 jobs added. That was less than expected. We actually saw some shrinking of jobs in the manufacturing sector. We're probably already having some form of recession in manufacturing since we focus so much of our money now on services after spending so much money on goods, during the pandemic. So that's not an unusual scenario to imagine here with what's happening. But normally when we see the job market soften up, the stock market looks at that as a positive in this case because we're in an inflationary environment and we'll be able to, maybe get inflation to keep coming down as far as that goes. And, we all want more jobs. We all want, to have a very, very healthy job market. However, we also don't want to pay, 9% more every year for everything that we're buying. So you kind of have to find that balance where they can get enough jobs in a very good job market, but get back down into that 2% inflation rate, which is what the Fed's trying to do. At the moment, that's exactly the path that we're on. Inflation continues to come down. Job market is softening, but it's still historically a very good job market. Number of job openings has come down, but still very high. Unemployment has come up some, but still very low, and still creating jobs and not destroying jobs in that case. So we do have the big report, from the Department of Labor that comes out on Friday, tells us how many jobs were created in last month. So market's definitely going to be waiting around for that, see how that comes in. Here's the thing that I think that's happening. If you remember roughly this time last year, a lot of back and forth between, we have a recession, or we're going to have, higher inflation, back and forth. And eventually the recession conversation just really died off. We had really good numbers. The earnings weren't bad. Unemployment was still good. You look at all the different things that were happening economically, including a 5%, a little bit more than 5% gross domestic product growth in the third quarter. So recession was no longer talked about. We focused on inflation, and every time inflation came down, the market did better. So today, we had a signal that really I think we're going to start shifting our focus from the inflationary to the recession again. And that'll probably be something you're hearing about a lot, is a coming recession, the possible recession, how deep it might be or not be. And this is what happened last year too. And, basically when the Federal Reserve might be lowering rates. So right now the market is expecting 4 rate cuts next year, starting in May. We'll see what happens as far as that goes. But it's very interesting to see how this plays out, because so far we're going in for this soft landing where we might have a recession, but you might not even know we've had one, type of thing. And, that could be worse. Things could happen. Something could break. Rates are higher. There's different things that can happen. But, everything that they've been talking about, Chairman Powell and Janet Yellen, for example, has actually come true so far. Rates have gone up, and then we had this, inflation come down, and employment has still stayed fairly decent, and the economy has stayed fairly decent in that same time frame. And so there's been a lot more conversations about this soft landing, which is a very rare event, actually. It's not easy to do. We'll see if that can play out. But today was pretty fascinating to see how this goes. The big money seems to be moving into the Bitcoin arena with the excitement about the possible Bitcoin ETF that might be approved. And of course, the bonds are seeing a very nice run. So today, even though the stock market was down, the long-term bonds that you look at out there for treasury bonds, especially, were up 1.5 to 2.5% today. We have some of those in our bond portfolio. And so I think sometimes that's where the action is. So the stock market was the thing in November, was really rolling. It made 8.9% the S&P 500. And right now, some of that money is being, siphoned off into the bond market where there's bigger returns coming right now. And maybe the Bitcoin market also, as they get ready for this ETF possible launch. So really interesting day altogether. Look forward to seeing what's going to happen tomorrow. Thank you very much.